And inshallah, as they say in our neck of the woods, there he is, Valerie Chow from Wood Mackenzie in Singapore. And we're looking at our sort of general narrative here, the outlook for the year ahead, 2023. We've heard a lot about China already this morning and India, and we want to get a sense of the wider Asian region. And the one of the questions we're tackling in this session is, how long will we see these new global energy trade flows last? We're seeing a lot of Russian oil coming into Asia, into India and China in particular. We're going to probably see some Russian products come in the new year with the embargo from Europe starting on February the 5th. And what will be the consequences for the international oil markets? So Asia looks like it started the year with an incredibly positive outlook. The MSCI index already at a 20+% rise, bull market from the low. We've got just even today, most equity markets in Asia with green arrows up. We even have inflation reversing in Australia, which might be a bellwether for what we might see elsewhere. So, but generally it does feel like the narrative opening the new year across Asia is very, very positive. Peter McGuire, sitting in Australia and looking from the perspective across the Asian region and this whole point of China reopening, what it might mean for Asia as a whole. We're seeing some warmer tones of rapprochement between Australia and China, while at the same token, just in the last day, we're seeing the Chinese reacting to Japan and South Korea's decision to require COVID tests, and now they've reciprocated and blocking visas for South Koreans and Japanese to go into China. Peter, your thoughts as to where the wider region goes with the reopening of China and what it might mean?
Well, good morning, Sean, and greetings from Sydney to the panelists. Delighted to join you. First off, I think it's a positive tone, Sean, and that's been demonstrated with the way this market has reacted across base metals and certainly equities this year. We've had a very nice move to the upside, and by the looks of it, that momentum may continue. We're waiting to see how tomorrow night goes as far as the release of those CPI numbers, but the overall mood seems to be one of positive tone. And from a tourism perspective, certainly Australia opens its doors, and also opens its doors to students from China, which with first semester starts in only about 5 or 6 weeks away for universities. So that's a positive mood. And then the other side is that the overall, I think, consumption for energy, for base metals, and for the commodity sector is going to be stronger. So that's a good sign for producers, and the overall economy, I think, will do reasonably well out of it. Quite softness across Eurozone, softness going to continue in USA, but China may do quite nicely out of it with a reasonable GDP number.
Peter, we saw in 2022 OPEC Plus manage its oil output policy through COVID and beyond, maximizing price. They call it market stability, but in terms of how they manage the market, the outcome of which was $100 average on Brent through 2022. And we obviously just spoke there about LNG, and the gas markets and price in last year were massive. And we had I think a 40-year high on the dollar strength, sort of peak yes. Dollar. All of those things combined, you would think, oh my goodness, Asian emerging markets are going to collapse. And yet they didn't. Are Asian economies more resilient starting into this year, or is the penny still to drop on all of this weight from strong dollar, high commodity and energy costs?
Well, Sean, I mean, in a lot of ways, 22 was a perfect storm, wasn't it? When you're looking at, from a geopolitical front with Ukraine and Russia, you think about price of inflation and with the dollar, and then with the crude issues and energy issues. So that all created a volatility and a wonderful trading environment over that calendar year. Now, a lot of traders are saying, I think that 23 is going to mirror image in a lot of ways the 22 story. So we're expecting big price swings and the impact to smaller Asian economies with high energy prices, well, they've lived through it so far, but I think the storyline is a little bit different now versus this time last year with inflation. And Australia's feeling that, and I can only put that first part on. We were expecting inflation to actually pull back, and we've just reported 7.3%, really, a big boom to the upside. So that hasn't been a positive tone, and this could be a further issue across all of Asia. If they can't manage inflation, the cost is going to be greatly absorbed by the man and woman on the street. And we're expecting to see higher energy prices and a return to higher inflation.
Any concerns, Peter, across Asia with dollar-denominated debt, sovereign debt that could, we've saw in previous cycles with these same collection of issues present, that we did see defaults? What's the outlook, do you think, that one needs to keep an eye out there?
Well, we're all mindful of the 1998 currency crisis. We're understanding from a sovereign debt perspective. So you're looking at, how smaller nations fare and their debts and certainly repayment. So, they're all intricate parts of not only their risk management profiles, but also their currencies. And that's why we've seen, Sean, such dramatic moves. We look at, major economies. Have a look. Don't talk about the small ones. Talk about the big ones. We saw a yen only a few months back at 150. Who could have imagined it? Now we're nearly at 132. We've seen, and that was just in a short period of time. Have a look at the euro. We were nudging 95 or 0.95. We're now at 1.07. The pound, only in the last few months, early September, we hit a 103.50. We're now at 122. So, all of this is really
without any real changes in the macro picture. I mean,
that's right.
Is peak dollar over, or do you think there's still a revisit there?
I think it's over for the short term. I can't see it getting back to 114 compared to where it's running at 103 at the moment, unless you saw something dramatic out of left field, be it Jamie Dimon is right, and Jamie says we're going to see higher interest rates, and is 5.5 enough? So if we saw something go to 6 or 7% in US, Sean, and that underpin US dollar, then that changes global dynamics considerably.
Peter, your thoughts and outlook for the year ahead from an Asian perspective?
Well, I think for first, I'm building on both Valerie and Vandana's points. I think first off, Sean, we think that crude will probably edge even higher than that 80 to 85. We're at 80 now for Brent, and I think that very, very achievable 90 plus, and I won't be surprised to even go closer to that 100 mark. I just think that this year is going to be a very volatile year, not only for production, but more importantly for the overall general world health, economic health. And I think that it's really going to paint a picture of higher prices, and the impact to currencies and commodities and certainly to countries is going to be felt all across Main Street. So
even with prices, the IMF forecasting 1/3 or more of the global economy to go into recession.
Yes, I do believe that. I think the inflation story isn't under control yet, and I wouldn't be surprised to see higher energy prices. So we'll go out there on that one. And the second point is, and I'm conscious as far as those forecasted numbers, but yes, I think there's going to be a lot of pain this year. I think volatility, and it's a year to probably reflect on 22, and I think 23 will be wilder than what we saw in 22, Sean.
Do you share Valerie's position that we've passed peak volatility, Peter?
Yeah, not necessarily for base metals, not necessarily, I don't think, for currency fluctuations. I think that's going to remain, Sean, and certainly not for inflation. After getting that read in Australia today, we're conscious that, and if tomorrow's number is worse than expected, I'm going to say it's going to go with consensus. But if it hits the scale the other way, Sean, then it's game on, and I wouldn't be surprised to see big moves from the Fed and central bankers globally.
Well, we're going to have to wrap up the Asia Energy Markets session there. Thank you so much, Vandana Hari, founder and CEO of Vanda Insights, Peter McGuire, CEO of XM Australia, Valerie Chow, VP, Head of APAC Gas and LNG Research at Wood Mackenzie. All three, of course, regular commentators on the Daily Energy Markets podcast. So we'll hear them through the year to see how these forecasts stack up, they'll be held to account. But until then, thank you so much. We're going to take a short break. We'll be back at 10:30 UAE time as we move into the Middle East section of the UAE Energy Forum with interviews and panels on all of these subjects from a Middle East perspective. Thank you very much.
Thank you.
Thank you, Sean.
Thanks, Sean.